Hey everyone, this is Rahul with the Alternative Investors Hangout, and today we have here Robert Rapier. He's at the Consumer Energy Report. Thanks for coming on, Robert.
Thanks, Rahul, for having me.
Okay, I wanted to look at the oil market right now. Last year we saw a lot of volatility in this market, especially when we had an election year. It went down to $79 a barrel. And right now it's trading around $94 to $95 a barrel. So where do you see the price of oil trading this year? Do you see it going back down to $79 a barrel, or do you see it in a constant trading range, maybe like 85 to 95 around this range?
I think in a short term, anything is possible. It could go down to 79 or below. I think what we will see is WTI and Brent both trading down from where they were at last year. I think that right now the world capacity is growing faster than world demand, and it's just a result of the cyclicality of the oil industry. We've had high oil prices for a few years. A lot of projects have come online, and high oil prices also curbed demand somewhat in Europe and the United States. And so capacity is finally catching up. We saw prices slide a little bit. WTI and Brent both started out the year last year over 100, and they declined through the year. I think they'll decline again through the year this year, but we may see some spikes up and down. I mean, right now WTI is ticking up just a little bit, but I don't think it'll stay there. I don't think it'll trade sustainably above 100 this year. I do think that the Brent WTI differential, which has been caused by overcapacity in the mid-continent part of the U.S. and Canada, and an oil glut at Cushing. So what's happened is more oil has flowed into Cushing, Oklahoma than could flow out. And so oil inventories have grown there by, I think, like 30 million barrels over the last couple of years. And new pipeline capacity is coming on this year. The southern leg of Keystone will come on in the later part of the year. That'll take 700,000 barrels a day out of Cushing. There's some other pipelines that'll take another 450,000 barrels out. And so that glut should be relieved. WTI prices, while I think they will still trade down, I think Brent could probably fall more, and you'll see Brent and WTI come back together.
You talked a lot about what's going on in the U.S., but the Saudis last year, they pumped a lot of oil into the marketplace, and that drove down the price of oil. I'm not going to get into oil conspiracies, but it probably had to deal with the election, in my opinion. But
I think they were responding to Iran, too. I mean, Saudi not too crazy about Iran, and with the sanctions on Iran, I think Saudi wanted to be sure that the world didn't suffer as a result of the sanctions on Iran.
Yeah, that could be an interesting point as well. But what do you think is going to happen with the Saudis this year? Are they going to not pump as much oil as last year?
Yeah, I think that's what's going to happen. I mean, OPEC came out the other day and they said that a combination of the fiscal issue in the U.S., the debt crisis in Europe, increased production in the U.S., they were seeing softening demand for OPEC oil, and they have dialed down production to the lowest levels in a year. And I think we'll see that continue this year. I think they'd love to hold prices around $100, and if they can maintain solidarity within OPEC, they can pull that off. I mean, they still can have a dramatic impact on the global oil price. And as long as they will, just stick together, I think they can do that. They can certainly hold oil prices up if they'll cut production enough.
All right, moving forward, I wanted to get into the topic of natural gas. And there's this bond manager, Jeff Gundlach. He's been predicting all these trends in the marketplace, and he's been correct. But he made this interesting point sometime in September or October of last year. I don't remember when. But he said that natural gas is dirt cheap, just as gold was dirt cheap in 1997. So do you believe that natural gas is dirt cheap right now and that we're going to have a natural gas boom and natural gas prices will go up?
Yeah, compared to other energy sources, natural gas is dirt cheap. I mean, on a BTU equivalent basis, the price of natural gas is maybe a tenth that of oil. So it is dirt cheap. The fracking boom has led to oversupply in the U.S., and that's driven the price down. It did come off the bottom last year and is ticking up, and we saw a huge swing of rigs from natural gas production to oil production. And so natural gas rigs have fallen to, I think, a decade-long low. And eventually, I think we'll see, a little bit of constraints on supply, and I think price will tick up. So where I see WTI and Brent trading down, I do see gas prices trading up somewhat from last year. And I think over the next few years, they will trade higher. Because I think natural gas is dirt cheap. I think there'll be a big battle when we go to try to export it. And a lot of people argue that, that's not good for the U.S. We've got a marketing boom happening in the U.S. as a result of cheap natural gas, and we risk snuffing that out. There will be some exports. Well, we got some exports going on right now, not much, but there's a little. I expect if that happens, if we start exporting a lot, it'll further drive up prices, but I do expect there to be a big fight over that.
Yeah, you do mention how the price of natural gas should go up, and tying this into what Obama may want to do, we may have some sort of carbon tax initiative that's set forth probably through executive orders. And Marin Katusa, a top energy analyst at KC Research, has stated that if we do have some sort of cap-and-trade deal or some executive order, natural gas is going to be the biggest winner. Do you agree with that?
Yeah, that would be correct. You'd see a more rapid conversion of coal-fired power to natural gas. I don't think there's going to be a cap and trade, though. I mean, I predicted the first term that there wouldn't be cap and trade. There is tremendous resistance to that, especially among Republicans. And I don't know if it's a widely known fact, but the U.S. has had the largest declines in carbon emissions of any country in the world over the last 5 or 6 years. And so critics of a cap and trade could point to that and say, we don't need cap and trade. We're already dramatically reducing carbon emissions, and it's a result of the fracking boom and low natural gas prices and higher CAFE standards and all these things. And so critics would have a good point there to say, we don't actually need this. I mean, our emissions have dropped, faster than anybody else's without this.
You do mention that we're having more fracking, and I hear all of this talk in the mainstream media that fracking can cause some problems to individuals in those communities, some health problems. So do you agree with that, or have you looked into that? Because I always get this from some of the sources that I read.
Yeah, tremendous amount of misinformation on this. I think the movie Gasland promoted tremendous amount of misinformation. I think Josh Fox has been nailed on a lot of things that he said. Just very misleading things. The one about him lighting the tap water, that was a big promotion in the movie. That was naturally occurring gas. There was no fracking in the area. So there's that kind of misinformation. Now, it is possible, and I think that this does definitely warrant more study. I mean, when you're talking about people's water, that's very serious business. There have been cases where improper cementing did get some contamination in groundwater, but it wasn't the fracking itself; it was the improper cementing of the well. There aren't, to my knowledge, and I actually got the president's science advisor testified a couple of years ago that there were 0 known cases of fracking contaminating water. Now, that doesn't mean it can't happen, and I saw a recent study that said animals have been determined to be sicker in regions where fracking's going on. So there's enough smoke where there could be fire. It's definitely worth looking further into. The revolution has happened very fast. You've got a lot of operators here. You're going to have some irresponsible operators. I do think regulations should be pretty tight on this. You're having a lot of activity in parts of the country that aren't traditional energy-producing areas, and so there's going to be resistance to that. They don't like, a gas well, and they don't like the trucks running up and down the roads. So, a lot of resistance is based on that. A lot of it's based on misinformation, and there may be some nuggets of truth there.
All right. going to the last topic, we heard all this talk about the Keystone Pipeline, and it wasn't passed in 2012. So do you see this now happening under Obama's new administration, because now he doesn't have to be reelected and he doesn't need to placate the environmentalist wing of his party? So do you see some sort of deal coming forth or coming by sometime this year or maybe in the next few years?
Yes, I think it will happen this quarter. I think there's a decision due this quarter. And environmentalists realized that they were about to make a decision to go ahead. The State Department issued their environmental impact statement back in the summer, and they said there was minimal impact on the environment, and the crude oil quality was very similar to crude oil that goes through the pipelines now. That's when environmentalists mobilized and they started to protest, and those protests were successful in scaring the president enough that he said, I'm in a close election here. I will punt this until after the election and placate the environmentalists. And when he did that, a lot of people said, well, what a courageous decision. And I said, that's not a courageous decision at all. A courageous decision would be to come down on one side or the other. Punting is not a courageous decision. The irony of this is that even as the environmentalists try to block that pipeline, the amount of oil being moved by rail has exploded. And so the pipeline is being built. It's just being built on rail right now. And rail is a less efficient and generally more dangerous way to move the oil around. And it's more costly for the oil companies. But the amount of oil that's increased over the last couple of years is probably equivalent to what the Keystone Pipeline would move. And I think a lot of people don't realize that. You know, what would happen is if the United States succeeded, if environmentalists succeeded in shutting that pipeline down, Canada will redouble their efforts to get that oil to their west coast so they can get it to China. And so then the United States will continue to import oil from Venezuela. It'll make that long, inefficient trip from Venezuela. And then Canada's oil, instead of coming to us efficiently, will make that long trip to China, and environmentalists will have made things worse instead of better.
So that would essentially hurt our trade deficit as well then?
Yes.
If we're good. All right, Robert, before I let you go, how can people follow your own work?
It's in a lot of places. I write a column at Consumer Energy Report. I'm the chief investment strategist at the Energy Strategist over on Investing Daily. If you Google my name, you'll find my column. I think Consumer Energy Report is one of the top hits there. I'm on Twitter. I'm on Facebook. So it's not hard to find me.
All right. Thanks for coming on again, Robert.
You bet. Anytime.